Welcome back to the channel, friends. Today I want to talk to you about something else than the S&P 500. Now, if you've been watching my videos, you know that I'm a big fan of investing into ETFs, and especially my favorite one is actually the S&P 500, the 500 biggest companies in the US. However, of course, there are many more ETFs to choose from, and some of you have been asking me to look at some potentially other interesting ETFs. And I thought in this video we're going to be doing just that, to kind of go through, kind of global ETFs, some industry-specific ETFs, and see what else is out there, and maybe get some of you interested to diversify away from what I'm investing. But for you, there might be also other options, again, depending where you live, or just to diversify, right? In general, I'm a big fan of diversifying the investments. Of course, on top of my ETF investments, I also have my Bitcoin holding, as well as my real estate, and of course, my cash and emergency fund. So I'll try to diversify across those, but in each individual asset class, I usually only have one, because I really like to simplify my investing process. But I know a lot of you might be wanting to have different ETFs, and I think it's totally fine and valid as well. So let's have a look and see what's out there and how do they perform over time. Now, for researching ETFs specifically, just ETFs, so really recommend you. And you can just go over here on ETF Screener, and we have a number of presets and filters that we can choose from. But let's start off with the market overview to kind of get a glimpse of what's happening across the different ETF markets globally. And here we already see sort of some of the biggest indices in terms of ETF investing. We have the MSCI World, MSCI Emerging Markets, and then we have also here in the list form the index overview, sort of on a global perspective. And we see here global markets. Of course, we have the FTSE All World. Another very popular one is the MSCI All Country World. So yeah, you have different options to choose from. And you see here right away how they did over time. All of them on a similar path. And we'll go into each in a moment. Then, of course, we have the global developed market. So this is more the Western world in a way, if you wanted to. So these are the more established countries. And then, of course, we have the emerging countries. So we'll also have a look in a second, what does it mean emerging and what does it mean developed. Then we also have some other ETFs by sector, so we'll jump into this in a second. But let's start off comparing some of the developed versus emerging markets. So when we go into here, for example, the FTSE developed, the FTSE from the Financial Times, basically we go into this over here, and you can see a couple of ETFs listed over here. Of course, there might be more ETFs globally in existence, but here there are three more prominent ones. You can see that they're applicable for non-US citizens because they have the UCITS abbreviation, which you want to be investing in if you're not American, because that way, basically, well, there's many advantages to it. First of all, Europeans and other countries, they can't actually directly buy into US ETFs. Plus, there's also another reason why you don't want to be doing that, and that's because of the US estate tax. So you want to really make sure you invest into the UCITS ETF, and you see most of them being here are UCITS ETFs. So from here, obviously, you have different filters you can go, but I want to look at the biggest one that is most prominent. Right now, we have two different options, the Vanguard FTSE Developed World and the Vanguard FTSE Developed World. Of course, one of them is distributing, one of them is accumulating, and in this case, the distributing one is slightly larger. So let's click into this and see what it's actually been holding. So you can just quickly click over here into the holdings, and you see what's included over there. And right away, you see, of course, because it is developed world, you have some familiar countries over here. Of course, as with many of the ETFs out there, majority will still be based in the US of their holdings. We have United States represented with 65%, Japan with 6.3%, then UK with only 3.6%, Switzerland 2.7%, and then a couple of other Western countries that contribute only a little part. I mean, Germany with 2.09%, so very little. So yeah, when you look at the top 10 holdings, some of you may remember that very closely mimics the S&P 500, which I'm a big fan of. But hey, it is what it is. And also when we look at the sectorial breakdown, very similar indeed. Of course, some of the smaller holdings over here, they will include some other companies, as it shows over here, from the Netherlands, from Australia. So it's good to have a bit more global diversification if that's important for you. Now let's see how that performed over the last 5 years compared to, of course, our beloved S&P 500. And we see right away, of course, the S&P performed very well with 97% growth over a 5-year period. So basically, you doubled your money in 5 years. And the Vanguard FTSE Developed World, that's the holdings we just had a look at, slightly underperformed, but still actually not bad at 76%. So definitely, something to consider in case you wanted to diversify. I think that could be a potentially good option, all world, developed world ETF, to kind of break away from, instead of relying 100% on the United States, which I'm doing actually right now, you might want to include a couple of other countries even though recently we have seen Japan suffering quite a bit, but of course long term Japan has done rather well. But with this, let's go into the emerging markets. So that's obviously the opposite. These are the non-developed, even though this terminology sometimes is a little bit harsh, because you'll see in a second some of those countries included in here, which I think are in some ways even more developed than some of the kind of legacy or developed countries. But again, that's not my definition. This is what the ETF providers and market makers came up with. But anyway, let's kind of have an apple to apple comparison and look at the FTSE emerging ones. So this is basically the same index provider, so to say, FTSE. Once again, we have UCITS. We have two over here. And funnily enough, once again, we have the distributing being significantly bigger in fund size than the accumulating. And I'm also personally always a fan of investing into distributing one, unless there are tax benefits for you or you really don't want to be bothered having to manually reinvest your dividends. Then of course the accumulating might make more sense. But funnily enough, in the US, for example, you don't have accumulating ETFs. They're all distributing. So it's just something we non-US citizens have the choice. But yeah, in many ways, unless there's a tax advantage for one or the other, the total returns will be essentially the same. Right, with this, let's go into the ETF with a bigger fund size. In this case, once again, from Vanguard, FTSE Emerging Markets. And from here, I can quickly go into the holdings. And you see here quite a different number of countries represented, which are the so-called emerging countries. Now, I lived 2 years in China and I'm really amazed when you go to Shanghai, Beijing, Shenzhen. I mean, this is such a developed country. Everything is digital, so advanced. But hey, somebody classified it as emerging, so be it. Taiwan, they're producing 75% of all semiconductors in the world are made in Taiwan. Such a developed country. Once again, classified as emerging, be it as it may. But here you see really quite a different set of countries. And I like the diversity, right? You don't have 60% in one country as emerging. Really a nice split at the top here. Of course, India, really promising with the Nifty 50 index. I reviewed that in another video. They've done actually really well, even outperforming the S&P 500 over a couple of years. So yeah, very promising numbers over there. Sectors as well represented. Financial, very strong over there. Technological as well. And then you see here the top 10 holdings in the form of individual companies. And yeah, looking at that, some of them might seem familiar, like Taiwan semiconductor manufacturing company, right? They're essentially producing majority of the chips in the world these days. Then we have Tencent, also from China. We are familiar with that. Alibaba, Reliance Industries. To be honest, I haven't heard before. The same HDFX, PDD Holding, Hon High Precision, also haven't heard about it. So yeah, this is really refreshing to see. Not the usual companies we see from the US. So here, I think you have really some nice diversification, which, if you want that, I think that's great. Because otherwise, as I've shown you previously, it's still very much similar like the S&P 500, but here it's very much different. So if you're into that, I think it's really good to kind of have a real focus on emerging. But let's see how they did compared to the S&P 500. So if I add it over here, S&P, this is the iShares one. And we see here over a 5-year period, well, sadly, not that impressive. Once again, S&P remains at 97% as it has been before, but the Vanguard FTSE emerging markets only returned a measly 25%. So that's of course the kind of risk, right? Because you invest into something less known, right? All of those companies we see over here, at least the majority of them, some of them we may know, but the rest we don't follow on a day-to-day basis and we don't know how they develop over time. And apparently, well, it hasn't really performed that well over time, which is a bit unfortunate to see. It rather flatlined since about, 2021, before it moved in similar direction, which is a bit unfortunate to see. Now, based on that graph alone, I don't know if it depends on a certain country or certain individual companies that did poorly, but over time, the growth hasn't really been there and underperformed by almost 3/4 versus the S&P. So for me, looking at that, I wouldn't actually be too excited investing into that. Right, going back to the market overview, let's go down to the index overview by sector. So here we have all the various sectors that you can see from telecommunication, technology, utilities, healthcare, financials, industrials, consumer staples, energy, basic materials, and consumer discretionary. So looking at all of those, let's go ahead and filter by the 3-year performance. Who performed the best over 3 years? And what do you guess? Well, the winner over 3 years, which is not that long of a period, but it is energy. To be honest, I was actually quite surprised. I would have guessed technology, but over a 3-year period, energy won. Now, sadly, I can't seem to filter for even longer period, at least on this view over here. But let's take 3-year performance as a base. Even industrials on 3rd spot, which I was quite surprised. Financials on 4th. And then we have a couple of others. At the bottom, we probably could have guessed that consumer discretionary which of course was really suffering due to high inflation, consumer spending less. And yeah, over a 3-year period, it literally stayed flat by only 0.87%, which is way less than inflation in the same period. So that's actually a funny conundrum. But yeah, looking at energy, I mean, that's 97%. We saw just previously that the S&P 500 grew around 97% in 5 years. So really impressive performance. So let's look into this. So here the index is MSCI World Energy. So if we click into this, we'll see the various ETFs that are reflecting that index basically. And right now we see 3 different ones. Of course, the fund size is not that big because it's kind of really a sectorial ETF. It seems more people want to invest into more broad fund, bigger ETFs, but sectorial ETFs are still, performing strongly over time, as we can see. Let's take the biggest one in fund size, which is currently Xtrackers MSCI World Energy UCITS ETF. I mean, of course, I understand at first those names are a little bit overwhelming, but after a while you get the hang. What is the index name? The Xtrackers is basically the ETF provider, right? And then UCITS, because it should be UCITS if you're non-US citizen. And yeah, over time you get the hang of it. The same with, when it says this, it means distributing, and sometimes says ACC is accumulating. So after a while you get a hang of what it stands for. Let's click into this and see basically the holdings, what it offers. So if I jump into this over here, we see right away in terms of countries, a familiar site, US running the show with 62% of the holdings in the energy sector coming from US alone. Then we have Canada, United Kingdom, France, and let's open up some others over here, Australia, Japan, Norway, Italy. Let's look into the top holdings. And you see some really familiar names, of course, most of them being American, and I think a lot of us will recognize those names. We have ExxonMobil over here, Chevron, Shell, some strong dividend payers also, which something I was looking at previously when I invested into individual dividend shares. They were quite tempting, I must say. Then Total Energies from, as you can see, SE, that means they are from France. So that's nice to see a little bit of different companies represented over there. Canadian Natural, naturally a Canadian company, and some other ones there as well. The top 10 still, if you think about it, takes almost 60% of the entire holding out of 58. So yeah, but that's really obviously into energy, which, yeah, as I said, I was quite surprised over a 3-year period. Again, of course, some macroeconomic reasons and political reasons. We've seen conflicts across different countries and different regions, which has, of course, led to petrol prices and energy prices going up. So let's see how they did over a 5-year period versus the S&P. And once again, I pull up both. And here we see the S&P actually grew by 97%, while the energy only grew by 70%. So if I go back to the 3-year period, actually over a 3-year period, it was beating it. So it's also something to keep in mind. Some people, when they tell you what ETF to buy and they show you exactly those numbers they want to show you, because I could say on a 3-year period, you should be buying that particular ETF because it outperformed the S&P 500 by almost 3 times as much, right? I mean, these numbers don't lie. But then if I zoom out even further, well, to 5 year, it's already a different story. You can see here, energy performed worse over 5 years than it performed over 3 years. So they really benefited from the last few years of price hikes due to aforementioned reasons. And if I go to max over here, that means we're going back, at least in this case, to 2016. And here we start seeing a major performance difference, 202% for the S&P 500 versus only 89% for that particular energy ETF. So actually, over a 3-year period, that was probably the strongest return. Anything beyond that actually performed worse. That's something interesting to keep in mind when you invest into particular sectors, because different sectors have their golden times at different times, right? Like technology 30 years ago probably didn't do so well as they're doing right now, depending where we are in the cycle, right? You see over here, July in 2024, telecommunications was down very much, but previously it was actually doing well. The same, for example, with utilities, right? Last year in August, utilities was down by 4.1%. Now this July, it's up by 5%. For example, energy, right? I mean, in March 2024, it peaked by 9.2%. So really strong performance. But then October down 3.4%. So very volatile. And well, what can I say? Ultimately, for me, all roads lead back to the S&P 500. I'm sorry, you probably heard me say this way too many times. But again, I'm just sharing my thoughts, what I'm doing. And yeah, when I look at the holdings over here, I have some really strong companies that I would personally wouldn't mind investing individually. But then I would have to kind of rebalance once in a while and follow which one is doing better than the other. But as an investor into that ETF, I benefited from all the amazing ride and performance Nvidia has done over the last few months, right? And if they drop and somebody else comes up, I will just be fine as well. And again, looking at the different sectors, I have such a nice diversification across all of them because I do have technology, I do have healthcare, and I also have energy. Yes, you could say that energy is less, but we've seen also over a longer period, energy hasn't actually done so well, right? So maybe I don't want to have too much energy. So here you really bet on the winning horse, so to say. And that's why I have my conviction to continue investing into the S&P 500. But at the same time, I hope this video showed you there are many ways of how you can possibly invest your hard-earned money and different ways in choosing different ETFs, right? You can invest into a specific region. You can go ahead and select the region Europe, for example, and you have all the various, equities inside Europe, MSCI Europe, you have the strongest performers in Europe over there. Then of course you have the various countries also featured, Poland, Turkey, DAX, these are the 40 strongest companies in Germany, as well as cryptocurrencies, right? You can now buy ETFs based around specific cryptocurrencies. You don't have to worry about holding on to the private keys, buy a ledger, hardware wallet and what have you. You can just buy, a Bitcoin ETF from one of the big ETF providers out there and benefit that way. Even though personally, I'm not a big fan of that because ultimately you're not actually owning the asset. You just benefit from the price action. But if push comes to shove, you don't have many of the benefits that actually Bitcoin would offer to you. But that's maybe a topic for another video. So yeah, ultimately many great options out there. If you're an ETF investor, I think it's really amazing. The options you have these days, you can really diversify your ETF portfolio in addition to maybe a couple of individual companies that you really believe in. And people ask me, should I only invest into ETFs? And I say, absolutely no. If you believe in a company, you do your due diligence, you have conviction, and you want to invest into them in the long term, then why not, right? Even though personally, I think the base of your holdings should probably be in an ETF because it's going to be hard to outperform the market. But if you want to speculate on some of the individual companies or invest into dividend growing companies, which I also used to do, then that's totally fine. Just understand that some of those may not actually outperform the S&P over the long term. If you're fine with this and you just want to have a bit of diversification and maybe a little bit of concentration in a specific company, that's totally fine. There's no right or wrong in investing. Well, technically there are quite a few wrong ways, but there's not one right way, right? Otherwise, everybody would be investing into the one way. And well, we've seen even the super investors having their own various approaches towards investing. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.